Okay, right. So question 2. They bring this thing I talk about when we're talking during the week about the gross profit margin, gross profit markup, and I highlighted that as soon as you see gross profit margin, you just have to remember that that's gross profit over revenue, or gross profit over sales, right? Straight away. If you see gross profit markup, that's gross profit over cost of sales. So here, gross profit margin percentage can be calculated as gross profit over sales times 100%. Yep, 100%. That is true. Okay, great. So what's happening here? Again, I mean, I think this is for 9 marks. I think this is a great question. What are they telling you? So these people operate a gross profit margin. So you're thinking straight away, gross profit over sales is 25%. Straight away. You know that. You've written that. Always write that down straight away. Anyway, they tell us that inventory was this. That's opening inventory. Look at the dates carefully. This is the year end. So just watch out. This is what the revenue was. So revenue is 64,900. So if revenue is 64,900 and gross profit is 25%, well, I can find, I'm just going to use a different pen, cost of sales, right? Easily. I mean, cost of sales is 75%, right? Because sales minus gross profit is, well, sales minus cost of sales is. So, because cost of sales is 75%, well, I know that I've done 64,000 divided by 75, and I will get my cost of sales. So my cost of sales is 64,900 divided by 100 times 75, and that's cost of sales. So the first question says calculate cost of sales, and that comes out at 4,8,675. That's the first thing. You can already see where this is going. You've got cost of sales, you have opening inventory, you're given purchases. Some other question, you could be given closing inventory and told to find purchases. So everything we've been talking about, this flexibility or being comfortable with playing around with this. So what do we know? We know that opening inventory plus purchases minus closing inventory is equal to cost of sales, right? 48,675. So I'm looking for closing inventory. So I know this, and this really becomes maths. So the question is, how do we find cost of sales? I really don't mind how you go about doing this. In my mind, what I would do is, because this is negative here, I will take this over here and I'll bring this over here. Right? So in my head, I would do 5050 plus 48,390 minus 48,675, and that will give me my closing inventory. So it's just about how you arrange your equation, really, but this is ultimately what I'm trying to find. So your closing inventory should be 5050 plus 48,390 minus 48,675, and that gives us closing inventory of 4765. So you have closing inventory of 4765. That's what your closing inventory is. Okay, great stuff. Let's move on to the next one. Tells us here, if we look carefully, it tells us that you can pay. Please, let me just. I'll try and make mine bigger. But please, I hope I asked you to please use your. You have this question on the exam in case you can't see my screen. Because I can't seem to somehow widen the screenshot. I tried, but it hasn't really worked. So it says you compare this result with the physical inventory count at the year end, and the total inventory value is £350 lower than the calculation above. So you've calculated 4765, and you actually go out there and you do an inventory check, and you find out that the goods are actually worth minus 350 are actually worth 441. I mean, you've kind of done this, you've answered this by figuring this out. And so the question here is, and to be fair, I don't think I've ever mentioned this one in terms of what this could be. So first of all, this is talking about inventory. physical inventory, and this is equipment, and equipment is not inventory, so it's not this one, right? These were unpaid sales invoices. This has nothing to do with inventory. A high item was included twice. This would increase our inventory. So what's actually happened here is that we can have situations where the owner would take drawings, if you like, for themselves, if you like, during the year. You remember the drawings you can have drawings come out of, typically we've always talked about drawings come out of bank, but you can have, if you like, purchases, if you like. So you might have purchased some goods and the owner would take some for himself, and that's quite normal. So the answer here is I wouldn't panic as well. I mean, there's two of these. I think I mentioned it in my email, but at least you're seeing this now, which is why doing these questions also helps as well. So the textbook doesn't have any, but this is one where you have that. So he's taken some for himself, so that's fallen as well. And then this one is a bit of a logic question again, but let's see what they're really saying. They're saying here that the trader has a policy of allowing their customers to settle their accounts 1 month after the sale is made. So let's go back to the information that we have here for this customer. We have here sales of 64,900. So let me come back here. So sales of 64,900. So if you're doing 64,900 for the year, if you divide 64,900 by 12, that averages out to about 5,408 or 5,409 each month. And what they're saying here is that, whoops, sorry. Just come back here. That averages out to be about 5,408 each month, right? 60 times 12. So that's 64,900 divided by 12, if you did that. And it says that, so typically, if you get paid, if you're making sales every month on credit of 5,408, so if you make sales in January of 5,408, they're saying that you get the money in February. When you make sales in, which means that by the end of the year, when you make sales in December, you will be getting paid the money in January, which is the end of it. So you will always be late by 1 month. So you will be owed always roughly a month. And a month, the closest to this, they ask what's the closest, what's most likely to be the total. And the most likely one is this one here. It's the closest, if you like, to your figure. Okay, great. That's that one. 64,900 divided by 6490. So that actually has I just worked this out. This divided by this is actually 10 months. I don't know if it's a 10-month year in the end, but ultimately, really, this is kind of where you're going, dividing this by 12. And I mean, this is again like a slightly logic question. There's no real. It's just being flexible with the way they're thinking. But by doing this now, you sort of see where they're going. And finally, in this question, you have an ethics question for 3 marks. So again, you're working on a final account of another client, and it says that your manager is called away. He asks you to do something that you're not quite able to do. So this is this ethics, the question of professional competence. And you really shouldn't be doing anything that you're not quite ready or qualified to do. So it's not about doing the job to the best of your ability. You can do that, but don't submit the work. You can't submit the work to the client because you're not ready. Ask if you may have support from elsewhere in the organization. Always ask for support. Ask a family member, certainly a no-no. And you have no business speaking to the client, especially if it's to tell them the deadline will be missed. You don't have that authority. So this is the second one here is your answer. Okay, so that's the ethics question. With the ethics, please read again OPPIC, which is again on ethics, and just make sure you're comfortable and do the get questions in the exam kit as well. And that's question 2.